All right. Good afternoon, everybody. I hope you enjoyed your weekend. Hope you're ready to rock and roll this week. Got a couple of stocks here and a future for you. So let's go ahead and jump right into it. First one that I'm looking at is going to be corn futures. Corn has been on a good run lately. It even consolidated for a little bit here and is now starting to push back up. It actually made a high on Friday. We had a good squeeze building up. You can see this upward momentum in there. Still has a nice medium squeeze, so I like corn long here. Potential for it to keep on running. So I'm looking at doing is selling a put spread down here at support, right at that 50-day. Also, a good strong level that was tagged a couple of times. So with this one, okay, we're going to be looking 40 days out. I'm looking at the 695, so selling the 695s and buying the 670s. Okay. This is going to give you about an 81% chance. Right now, it's about 3.25 in credit, which equals about 160 bucks. Current buying power is just shy of $500. Okay. The next one that I'm looking at for you is going to be GDX. GDX also, with gold going on right now and everything, this gold miner ETF, we got that good run up, a little bit of slight consolidation, and it's starting to push up again. Also with this squeeze, a lot of upward momentum going on here. Looking for it to break out of this 39.90 area and return back up to those highs. Okay, so this one, I actually like to sell the 35 strike. Okay. And for right around 40 cents plus or minus, minimum of 3 contracts, that's going to give you a nice 85 pop and only going to cost $1,000 for 120 bucks. Now, if you got to define it, then I'll be looking at like right around a 30 delta, those 38s, those 36s with 2 contracts, okay? And that'll give you about, 55 cents, $110, max loss, 290, 66 pop. So it falls right in line. And when you come look at this again, those 35s are going to be well down below support. You got all 3 moving averages, another major area here. And those 38s are going to put you right at that 21. So not too bad, right? Next is Li, right? Auto. And this one, I'm looking at the downside. You can see that it's just been choppy. Not doing a whole lot, but it is in this downtrend. So this would be a short call here on this one, short call spread, and looking at selling the 30s. So I'm gonna be right above that 200 day. So you do got some resistance levels here, all the way up to that 200 day. You can see that this upward momentum has already started to slow down. So I'm looking for it to break out of support. It tagged it on Friday, 25.5, and it's got potential run room all the way down. And if it reaches 22, man, you got gap fill down here. With this one, May, right? We're in May on everything. Looking at selling those 30 calls right at a 30 delta and buying those 33s. Now we know the call side does not have as much credit as the put side does, so you can get 50 cents with 2 contracts, risk 500 to make one. I'm okay with this. Great 77 pop. You get your nice short deltas here, and like I said, max loss of 500. So not too bad there, right? Next one that I'm looking at is Macys, and actually look, 1930. Okay, Macys has done nothing but consolidate here. We did see it break the 200 day on Thursday, actually Wednesday it looks like, and not too bad. Still sideways, a little bit of a downtrend. So I'm looking at a neutral play with this one since we're looking in a weekly, but giving it tons of run room to the upside, right? So you got multiple levels of resistance all the way up before you even get tested. And then there's a little bit of coverage here to the downside. See that we got Thursday's low. Then you got down here at 21.5, just shy of 21.5. And then you even got all the way over here down just before 20. A lot of wiggle room on this. So with Macys, I'm looking in May 13th. Okay. So this is a weekly one. Now, not a lot of volume, but I don't want to strangle all the way out 40 days just yet if we can avoid it. So May 13th, looking at selling the 19 puts and those 30 calls. Okay, 40 to 45 cents in credit. Now, there was no volume on Friday on the call side, and there was just a little bit, actually not too bad, on the put side. But if you can get this without chasing it, so like I said, 40 to 45 cents, it's 84 pop with 3 contracts, delta neutral, 135 bucks, less, just over $700. So not too bad. Okay. Now, next will be ROST, ROST. Okay. Now, this one has been in a downtrend, kind of consolidated a little bit here, and then started to push up. You can see there's a squeeze, and that's building momentum. We got above the 50-day here. We got the crossovers on the moving averages. It's breaking out. Okay, got a little bit of resistance here at 97.5, but it's got some run room to go. With this one, I'm looking to sell below its current, I think this is actually a 2-year low. So ROST, May 20th, back to a monthly. Not a lot of volume because it's just not a lot. So I'm not going to chase this one. Again, it's a little wide. Actually better at the 85s, but you are a little bit closer. So depending on how aggressive you want to be. Okay. 80s in May. You know, if you can get 70 or better on this one, right? You're looking at a 93 pop, 2 contracts. Oh, right, $1,600. It's a little high when you look at it, but I take this high buying power for this really, really high probability of success. Now, if you don't mind doing a 16 delta, perfectly fine. You can drop that back down to 1 contract, maybe $1.15, $1.20. It'll still give you an 86 pop, and the buying power will be less than $1,000 to put on. Okay, but defined risk, you can see it's only 95 cents. I don't really like that, so this would be a naked only 80 to 85 strike, depending on how aggressive you want it to be. All right, and then the last one here is going to be XBI, which is the biotech ETF, and I'm looking at a short play here. It really just dropped, consolidated a little bit, looked like it was going to start taking off, but rejected and came right on back down. So this one, I am looking at selling the 102s here. Okay. And that's, as you can see, well above resistance. You got all your moving averages. And you got a little bit right here, about 97.5, and a little bit more up here, right around 99.25. A lot of wiggle room. Upward momentum already slowing down. Okay. And then the defined risk one would actually be here at the 98s, which is still well above multiple levels of resistance. All right. So here we go, May 20th, selling those 102s. Going to give you a nice 85 pop. Call it about $1.10 plus or minus. Okay, give you 1 contract. Be about 110 bucks, less than $1,000 to put on. Now, the defined risk version, go up to the 30 delta. And I believe it was this one here with 2 contracts. You're going to do a $4 wide. It's not quite there, right? So 2 contracts, selling the 98 calls, buying those 102s behind it. Try to get 80 cents or better for it, ideally here. Going to give you a nice 77 pop. 2 contracts, like I said, be about 160 bucks. And then your max loss is going to be right there at 640, and you still get reasonable short delta play. All right. And that's going to be it, gang. That's all I got for you. I'm working on something here. Hopefully I'll have it ready mid-month, end of month. You guys are going to like it. So until then, one day I hope to see you in chat. Take care, everybody.